Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews. I'm joined today by Kirk, who's the new Chief Executive of the New Zealand Bankers Association. Welcome to interest.co.nz, Kirk, and thanks for joining us.
Thanks, Gareth.
Could you begin by perhaps telling us a little bit about the New Zealand Bankers Association in terms of how you were appointed and who made the decision to appoint you and who the NZBA represents?
Sure. So the NZBA has been around, New Zealand Bankers Association has been around for 121 years. So its members are registered banks in New Zealand. Most of the registered banks in New Zealand. There are some wholesale banks who aren't members and some small retail banks who aren't members. But by and large, there's a pretty good representation. So how was I appointed? I was appointed by the council, which is all of the CEO representatives of the member banks. So I was appointed by council.
And I guess in terms of the registered banks, one of, if not the key relationship is with the Reserve Bank, obviously, as the regulator and the overseer. How would you describe the relationship between the major banks and the Reserve Bank at the moment? How is it?
Well, I'd probably describe it like this. I think there's always going to be a range of issues that banks have on the go with the Reserve Bank, their own individual issues as well as industry issues. We probably tend to look at more the industry-based issues and leave the banks to deal with their issues independently with the Reserve Bank. So, you know, there are a couple of big issues on the table with the Reserve Bank at the moment, with OBR and some of the Basel III requirements being accelerated by the Reserve Bank. So those things are things that we have to work through as an industry, I think.
And what are the views at the moment on the Basel III plans? I mean, obviously the Reserve Bank has put out a couple of consultation papers. Sure. They're looking at bringing in the new capital requirements, I guess, ahead of the Basel Committee's timeframe, which is, I think, ultimately by 2019. The Reserve Bank is looking to speed that up. It's also differing a little from APRA in terms of its approach, and obviously 4 of our big banks are Australian-owned, so that's an interesting aspect, I guess. So how's the industry feel about these moves?
So on the acceleration process, I think we probably need a bit more policy detail on and perhaps more justification on the acceleration, the reasons for acceleration. And you can understand why. You know, introducing new capital is no simple matter, and you have to plan properly for it. So, you know, I think it's only reasonable that we have a good justification for acceleration.
And one of the issues we've looked at here is the issue of some of the retail bonds issued by the banks and the fact that they don't look as if they're going to be classed as capital under the new requirements. Is that a particular issue, or is that part of the broader issue? So
there's a range of issues relating to capital and the acceleration timetable that banks probably want to continue to interact with the Reserve Bank on, and you know the Tier 2 issue is one of those. So yeah, I mean, it's a live issue.
And the open bank resolution policy, or the pre-positioning for it as the Reserve Bank puts it, that's obviously another major regulatory issue out there at the moment. How's the industry feeling about that and where the Reserve Bank is at with that one?
Again, probably one of the biggest issues is the gap in the policy justification. So, you know, the open bank resolution is not new. It's been around for, you know, more than 10 years in terms of a loose idea. But I think the banks probably need a little bit more of a clear picture of the policy justification for it. And in terms of, you know, we went kind of from a general idea into implementation and consultation on implementation. So, and with specific timeframes, which are relatively short. So, yeah, those things are difficult to manage in complex environments involving technology, and sometimes you know, more thought needs to be given to those timetables.
There've been comments in terms of the open bank resolution policy around the cost of implementing it, in terms of, I guess, you know, redesigning IT systems to deal with these sort of haircuts that it envisages, and potential even possibly for credit rating downgrades off the back of it. Whether that's would it ultimately happen or not, I'm not saying it would, but are those issues that are also concerns?
Well, I mean, I think again, I'll just go back to my earlier comment about there probably needed to be a bit more of a deeper consultation in the policy development process, so that sort of banks could have some of these questions answered before we move into a practical implementation phase. So, yeah, I mean, as I said before, still live issues.
And one of the other issues that the Banks Association has been working on is the US Foreign Account Tax Compliant Act, or FATCA. Yes.
Sure.
Now, we had your predecessor saying last year that to implement this could cost the New Zealand banking and financial sector up to $100 million. Mm-hmm. There was some work being done with your counterparts in Canada and Britain and Australia. There's obviously been some developments with the US working with some countries in Europe. What is the latest on this, and have your fears been allayed at all?
So there have been some new regulations which have been issued, which ameliorate some of the larger costs, but there's still plenty of issues that need to be dealt with in respect of FATCA, not the least of which is how you would amend your payment system to account for pass-through payments. So that's really complicated, and no jurisdiction has come to a landing on that. So I mean, I think the jurisdictions which still have kind of very similar interests, like New Zealand, Australia and Canada, continue to push for changes to account for some of those differences and to continue to reduce the cost. Because I mean, one of the issues is that it's likely that FATCA across the globe will cost more than the IRS for institutions and jurisdictions will cost more than the IRS are actually getting in revenue. So that's another reason to continue to engage both internally within New Zealand, with Australia, with Canada, with other like-minded jurisdictions. And
is our government being much help on that issue?
Well, look, I suppose what I can say about that is we are continuing to have discussions around the implications of FATCA with a wide variety of stakeholders, and in order to reduce those costs.
And another initiative that the NZ Bankers Association was involved in was the move to make switching between banks by customers easier. In late 2010, I think that was introduced, whereby basically you fill out a form and the two banks do the work for you if you're the customer. Yep. Kiwi Bank's obviously heavily been promoting this concept, and ASB has promoted it to some extent too. Just keen to get an idea from you of how competitive you think the New Zealand banking industry is these days. So obviously we've got four big banks that have 85-90% of the market, but there are a lot of other players out there. Do people know enough about them?
So yes, I think they do. I think they all probably two things. The switching initiative probably demonstrates how competitive our banking sector is, and I'm not necessarily sure that everybody's aware of that. It is sort of a relatively unique thing globally, so it's good for customers. They can make choices. We have pretty low barriers to entry for banks. We've seen a lot of sort of new banks, like the Cooperative Bank, SBS converting to SBS Bank back in 2009, I think it was. So what that tends to demonstrate is it's a pretty competitive market. I think banks across the board have become much more customer focused in the last probably 5 years, and really fighting hard for market share because it is so competitive. I think you'll see that competition heighten because and banks will be looking for different sort of new opportunities for revenue and for market share because of what's happening with global funding, because of flat credit growth. So that will heighten competition.
You mentioned there that the global funding issue, obviously, with the costs of sourcing the funding that banks then on lend to their customers, and also the flat lending growth that we're seeing. Would you consider those to be the two biggest challenges that the industry faces at the moment, or would there be some other challenges that you think are bigger, more significant?
Well, certainly funding is one really significant issue. I think you've probably had a couple of banks CEOs on here talking about those issues. Because of the uncertainty in global markets created specifically around Europe at the moment. So even that remains a live issue. Credit growth is due to remain flat for some time. I think the economy is stable but not growing rapidly. So credit growth simply reflects that. But some of the issues that we've talked about are also, pretty big issues for banks, and in particular the change to Basel III, the transition to complying with the open bank resolution policy, and when we see the end of it, FATCA. Those are really big challenges, really expensive challenges. Yep.
Well, thanks for coming in, Kirk. That's Kirk Hope, who's the CEO of the New Zealand Bankers Association, and I'm Gareth Vaughan at interest.co.nz with another Double Shot interview.